Who can issue certificate of deposit? In the world of personal finance, there are some products that are highly specialized, tailored to an individual's needs and available only through certain type of financial institution. Certificate of deposit or CD are not one of those products. You can buy a CD just about anywhere financial products are sold, but there are some key differences you will want to ensure you understand. What is a certificate of deposit? A certificate of deposit (CD) is a financial product that locks in your money for a certain period of time in return for a higher interest rate than you could get for a regular saving or checking account. Over the course of its term, whether that's just a couple of months or up to 10 years or more, the CD will accrue interest either at a fixed or variable rate. You will receive your original investment back along with the interest when the CD reaches maturity. At that point, you can take out the cash or use it to buy another CD. Where to buy certificate of deposit? Certificate of deposit are widely available at banks and other financial institutions both online and off. Commercial banks and credit unions. Given the relatively simple nature of certificate of deposit, it's no wonder that most banks offer at least one or more varieties of them to their customer. For example, Investopedia's regularly updated past bank CD rates listing track close to 200 brick-and-mortar banks, the internet division of traditional banks, and online-only banks that sell CDs. CD come in a variety of form, and not all banks or credit union may offer every type. CD can vary by term, interest rate, and minimum deposit requirements. They may also have different early withdrawal penalties should you need to take your money out before the term ends. For those reasons, it makes sense to shop around and not simply assume that your regular bank or credit union offers the best deal. Though their offerings will vary, a major benefit of going with the bank or credit union CD offerings is the insurance protection they typically provide from either the Federal Deposit Insurance Corporation (FDIC) or the National Credit Union Administration (NCUA). If your bank or credit union is federally insured by one of those agencies, your total deposit at that institution will be insured for up to $250,000 technically. That $250,000 maximum is per depositor, per financial institution, and per ownership category. So, if you have more than $250,000 you want to keep in the bank, you can structure your account in a way that will multiply your insurance coverage. For example, you could open both individual and joint account. When your CD term is close to ending, you will have to tell the bank how you want to proceed. Otherwise, the bank may simply roll your funds into another CD, locking it in for another term. Brokerage firm and independent sales representatives. In addition to bank and credit unions, you can also buy CD through many brokerage firms and independent sales representatives, commonly referred to as deposit brokers. They typically negotiate a higher interest rate with the bank in return for bringing in customers. That way, they are able to offer brokerage CD with attractive interest rate. These products are sometimes advertised as high-yield CD. Though traditional CD typically mature in 10 years or less, brokerage CD can come with significantly longer term, with some reaching 30 years. That doesn't mean, however, that your money will necessarily stay locked away for that long. Because brokerage CD are often sold on the secondary market, you can try to sell your CD to another investor. You will probably have to pay a sales fee, and you may lose money if interest rates on new CD have risen since you bought them. Brokerage CDs may or may not be covered by FDIC or NCUA insurance. That makes it all the more important that you buy a brokerage CD only from a reputable firm. What is a callable CD? A callable CD is one that allows the issuer to terminate the CD before its term ends. The issuer might call your city if interest rate drops substantially so that it doesn't have to keep paying you a higher rate. Thank you.